Hello and welcome back, guys. So in this particular session, what we'll be doing a question called Furlion, right? So let's see the requirement. Number A: assess showing all relevant calculation whether Furlion company should proceed with the significant opportunity. Discuss the assumptions made. So we need to show calculation, assumption, and then the other risks which will affect the decision of whether to establish a plant in Nazwa. Okay, establish a plant in Nazwa. Bishop model may be used. Okay, so three things we need to find out, right? Explain what is meant by options row and discuss the impact of changes in interest rate on the appraisal of the investment. So option row is change in interest rate, right? In respect to the option value, right? So C is discuss the possibility of Nazwan government obtaining funding for further land reclamation from World Bank, referring specifically to the International Development Association. Obtaining funding for further land reclamation from World Bank. Okay, so they need some kind of funding kind of thing, right? Okay, I'm pretty sure the first paragraph is going to be about this thing, background information. Furlion company, what does it do? It manufactures heavy industrial equipment and machinery. Okay, so two things, equipment and machinery. Basically, so could be same thing. So it could be used in difficult farming condition. Furlion chief executive has been investigating a significant opportunity in the country of Nazwa, where Furlion has not previously sold any product. Has not sold any product, right? Has not sold any product. The government of Nazwa has been undertaking a major land reclamation program, and Furlion equipment is particularly suitable for use on a reclaimed land. Okay, so it's undertaking a major land reclamation, and then it's suitable for the reclaimed land. Okay, because of the cost and problems involved in transporting its product, Furlion company's chief executive proposes that Furlion company establish a plant for manufacturing machinery in Nazwa. Because of cost and other problems such as transporting its products, right? They want to establish a manufacturing machinery. He knows that National government is keen to encourage the development of sustainable business within the country, right? And then what else? The initial calculation suggests that the proposed investment in Nazwa would have a negative NPV of 1.01 million. However, Furlion chief executive believes that there may be opportunity for greater cash inflows in the future if Nazwan government expands its land reclamation program. The government at present is struggling to fund expansion. There is negative NPV of this much, and then if the CEO believes that there may be opportunity for greater cash inflows in future, if the Nazwan government expands its land reclamation program, right? So if, that's a big if, right? The government at present is struggling to fund expansion of the program out of its own resources and is looking for other funding. That's why we've been given this World Bank. So it's planning to raise thing from there, right? Funds from there. If the Nazwan government obtains this funding, right, the chief executives has forecast that the increased demand for Furlion products would justify a 15 million additional expenditure at the site of the factory in 3 years' time. And the expected NPV of this expansion is 0. Expected NPV. So after 3 years, right, the expected NPV. So it can be assumed that all cost and revenue include inflation. The relevant cost of capital is 12%. Risk-free rate is 4%. As estimated likely volatility is 30%. One of the Furlion company's non-executive directors has read about possible changes in interest rate and wonders how this might affect the investment appraisal. How interest rate could affect. Okay. So it's basically about this thing, the second part. Right. Let's look at the solution as well. So we need to do a Bishop calculation. We need 5 variables for it, but let's just read the answering tips as well, right? So Bishop model is tested and in context of real options. Most of the input factors are easy to pick up from the question text. Take care with PA. Okay, that's always tricky sometimes, right? In real option, PA is the present value of all expected cash flows from the project excluding the initial investment, right? So we've got the variable standard deviation is there, so it's an option to expand, because we are expanding our current business into a new area, right? That's why. So risk-free rate is 4%, exercise date is 3 years, exercise price is what we've been given, 15 million of additional expenditure, right? And then the current price, or PA, right? So PA is basically the only difficult part in this question is this thing, okay? Just calculating the PA. You see, that's what they say in over here as well, right? So when you're calculating the PA, what does it say? The expected present value is going to be 0, right? So why does it become 0? Is basically when the initial investment minus your present value of cash flow equals to, this is equals to net present value, isn't it? That's the equation, right? Initial investment or present value of cash flow minus initial investment is basically your NPV, right? I wrote the thing a bit incorrectly, so I'll just correct it as well. Present value of cash flow minus initial investment, right? So what are we saying? That NPV is 0. What's our initial investment? It's 15 million, right? So in order for this, now we can find the present value of cash flow. Let's say this is X. So X equals to 15 million, right? So it is 15 million, but you see the present value of cash flow, that is happening only after 3 years, right? So that is in T3, that is in time 3, right? After 3 years. So we need to discount it back to present value, because PA is present value of all the expected present value, not the expected present value, not the expected value, but it is present value. So we have to discount it back to the today's price using what? We have a cost of capital given 12%. So 1 by 1.12 to the power 3, right? That's the value, and then we just discount it back. That's going to be 10.68, okay? After that, I think basically a lot of you will solve it, right? It's not a big thing. After that, just plug in the value in the formula, and then we should be good to go, right? You see over here as well, D1 as well, we have ln and then PA, and D1 equals to ln PA divided by PE plus R plus 0.5 S square times T under root S underscore T, right? And then D2 is what? D1 minus S under root T, right? That's the formula. So just plug in the values, ln under root this, so you can use this function ln in the spreadsheet as well, and then just do all this thing. And then for square, you can just do 0.3 into 0.3, or you can do a square as well, right? And then for square root, you can just use the square root formula thing as well, or you can do the other exponential, the other thing as well, like where you have a superscript kind of thing, right? You could do that. So you get a D1 of minus 0.163, and then just do the for the same thing. I recommend you do this thing separately, do this thing separately, do this thing separately, do this thing, I mean this whole thing separately, and this whole thing separately, so that this thing you can use later on, you know. Do it in separate cell. When I mean by like do it separately, do it in separate cell, like don't do it everything in A1 or B2 in Excel or anything, right? So do it in a different cell, so that it's more usable as well, you know. And then D2 as well, because you see you will be using this result from this, and then you can use the same value, this thing, same result over here as well for the second part of D2, right? Because this is also S under root 2, this is also S under root T, right? So you could do that, and then in both cases you are getting negative, right? So as per our normal distribution curve, what happens basically when you have something like this? So if it is less than 0, it has to fall within this range, right? So let's say this is a value, this is a normal distribution curve, the total area is 1, right? And then what's going to be the middle value then? 0.5, right? So if it lies below 0, you have to come this side, right? It has to lie somewhere here in this particular region, right? In order to reach over there, what should happen? Do you need to add it plus 0.5 or you should subtract it. You should always subtract it, right? So 0.5 minus what value? Now that's the question, right? So now I'll teach you how to look at the table as well. So what did we get? What was our result? Our result was 0.1630. So just take in the first two values, 0.16, okay? 0.16. So if you come to the table over here and then just look at 0.16, right? So you have to segregate that, okay? So 0.16, okay, what am I doing? Yeah, so 0.16 means, let me just erase this thing, 0.16 means we have to segregate that 0.1 and then 0.06, okay? So now we have to look at 0.1 in this side and then 0.06 in this one, okay? So now coming across, what's the value over here? 0.1036, okay? So we just put in that value, we just plug in that value. You see 0.036, right? That's what they have done. So similarly for the other thing, 0.68, right? 0.68. So that just means breaking it down again. The first digit 0.68, right? So it's going to be 0.6 and then 0.08. So 0.6 is come down from here, 0.6 is over here, 0.08 is over here. So just coming across, so we reach it over here, right? So 0.02518, 0.02518. So it's just a bit of slightly different, right? 0.17. But you could always use the norms dist function. You will get this value, okay? You don't need to subtract it or anything. If you use this function, you'll get directly, okay? You could try it as well, try doing that as well. Okay, so once you have this, if you didn't know how to use the function, I'm just teaching you that, okay? So you know how to calculate nd1. nd1 is, we know, nd2 is there, and then value of call option is going to be, just put in the formula, and then all you need to do is everything. But this e might be tricky, just use this exp function, okay? Exp function, remember, it's not like Excel that you have everything, but these are the things that it's there in the CBE platform. Okay, so call value option is going to be, you just plug in the values, right? PA is 10.68, and D1 is the value that we've got, 0.4664, 15 is the PE, and then this is there, and then E to the power RT. So R is what? Your risk-free rate, right? Which is 0.04 times your T is 3 years. So based on that, we get overall value of, or the value is 1.36, right? The value of the call option. This is a call option. If it was a put option, you would have to do an additional step. Otherwise, we don't need to do it. So how much value did we get? It was this value, right? So after that, what had happened? Normally, what do we do? NPV plus the option value will give us the strategic value, right? Strategic value. So in this case, what we are doing, since the option NPV was negative, option value is 1.36, this was negative 1.01, right? So this was negative, and this one was positive, so we did not do anything. Okay, so our strategic value over here is 0.35, but that's very marginal, right? Let's see. So the NPV has a the investment has a net positive NPV, so we should accept on those grounds, should consider the value of abandonment if the result turns out to be worse than expected, or option to delay, right? To see the reclamation program is going to continue, because it's still unsure, right? So they could have look at those kind of option as well. What are the assumptions? Let's look at that. Let's look at the assumptions. Assumptions: using real option for decision making has limitations, right? Assumptions. So real options are built around uncertainties surrounding future cash flows, but real option theory is only useful if management can effectively respond effectively to these uncertainties as they evolve, right? So Black-Scholes model itself has a lot of assumptions which may not be true in practice, right? It assumes that the market for the underlying asset and the volatility on the underlying asset follows a normal distribution, or like it just follows a normal pattern, right? So that does not happen because markets are imperfect, right? It assumes perfect market, a constant risk-free rate, right? So the risk-free rate that you're using is constant, but the rate what it could change within like 3 years. It's a 3 years is a long duration, right? In that period the risk-free rate could change, and then the constant volatility, the 30% volatility could also change, right? So all these assumptions are there. We can just write in the limitations of Bishop thing as well, right? And then the second part is Furlion government will also consider expectations about the future of land reclamation, right? So has the program been quick and as effective as Norwegian government, Naswan government originally expected? That's the question, right? We'll also want to consider how the program will be affected by the amount of funding the government obtains and any conditions attached to that funding. Amount of funding and then any conditions or not, right? So World Bank could put in a lot of conditions as well. So Furlion company may also wish to consider whether its investment of this type will be looked on favorably by the Naswan government and whether a tax or other concessions will be available. This may come with conditions given the government commitment to a sustainable economy, such as way production facilities operate and then the treatment of employees, right? The sustainable economy could add in more costs. So given this, there is a market which may expand in the future. Foreign companies should also consider the reaction of the competitors. And then this may be a market where establishing a significant presence quickly may be significant barrier if competitors try to enter the market later, right? So that could be a good thing because you'll already have your setup and everything is there, right? So it'll be harder for the competitors to enter the market later on, right? So it will be like a competitive advantage for them, right? Because you'll have like all this supply chain within your hand and everything, right? So as the investment fees for the manufacture of specialist equipment, it is possible that there is insufficient skilled labor in the labor pool in Nazwa, as well as training local labor. Supervision is likely to be required, at least initially, from staff based from other countries. There may be also cultural issues. We should always talk about that, right? Right, cultural issues, and then we can just point out all these things. So B number is what is meant by option row and discuss the impact of changes in interest row on the appraisal of the investment. Right, some of these points are, this is also pretty much generic statement, but whenever you're doing an overseas project or anything, you normally tend to write like the training cost and all, and then the cultural issues, and then basically you talk about the tax and all, right? And then yeah, basically you talk about the model that's been used. They talk about Bishop over here, and then they talked about all this thing as well, land reclamation and all as well, right? So the main issue at hand. So we need to talk about the option row, right? So we need to talk about option row and then its impact of changes in interest rate, right? So the sensitivity of valuation of options to interest rate can be measured by the option row. Sensitivity of valuation of option with respect to interest rate, right? So it measures is the amount of change in option value for a 1% change in risk-free rate, okay, risk-free interest rate. So if the arrow is positive for calls, so will be positive if the interest rate does increase, right? If it increases, it will be, so will it be for calls, and so will be positive if the interest rate does increase. Okay, so it has a positive correlation. However, interest rate tend to move quite slowly, and then the interest rate is often not a significant influence on the option value, particularly for short-term options. However, many real options are long-term and have a significant higher ROs than short-term options. The change in interest rate will be more significant the longer the time frame. Okay, so this is also a very good point that you should always mention whenever you're talking about a row, RSO. I would normally say like this is the definition of it, and then you can talk about the how, like in the time frame, how it will be. It's not a significant influence thing on option value, but what happens is when the real options are for a longer time, in that period what happens, the longer the time frame, the longer it will be more significant. Okay, row. In addition, there is possible indirect economic effects of interest rate changes, such as on the return demanded by finance provider, hence on cost of capital, right? So if the interest rate changes, there will also be a demand as well for a higher rate, right? Normally there would be a demand for higher rate, because otherwise if you're getting a higher rate in bank, why would you want to invest in this kind of business, right? So your cost of capital increases, KE increases, right? Or cost of capital, you could just say WACC increases, right? So what did we discuss? So basically we did talk about the definition of row. It's basically, it can be measured as the change in option value by a 1% change in interest rate. 1% change in interest rate. Okay, so there is all these other things also you should always remember. All this, the Greeks, they call it the Greeks, delta, gamma, rho, right? So all these things. All these things you should remember. There is 5 of them, just have a look at it as well. Sometimes it might be detailedly tested. Okay, so discuss the possibility, so it's for 4 marks. So discuss the possibility of Norwegian government obtaining funding for further relocations from the World Bank, referring specifically to the International Development Association. Okay, so World Bank provides loans often direct to governments on a commercial basis for capital projects. Loans are generally for long-term period and maybe which may suit Norwegian government. However, the terms of the loan may be onerous. Not just finance cost, but other conditions could be imposed on the scope of the project. Normally that's what they do, right? Scope of the project is also defined. Given the circumstances of the investment, NOSWA may be able to obtain assistance from International Development Association, which is part of World Bank. This provides loan on a more generous terms to the poorest countries. However, it is designed for countries with high credit risks, which would struggle to obtain funding by other means. NOSWA may not be eligible. Okay, so in terms of from the part of in terms of obtaining loans from International Development Association, it basically provides a loan to companies with to governments which do not have a very good credit rating and which have a high default risks, right? So those are basically funded by International Development Association, so NOSWA may not be available for that. So it could be that reason, right? So that's basically for 4 marks. I know this thing is very thing, but you could just talk about a role of World Bank and then usefulness of World Bank as a source of finance, role of IDA, and then role of usefulness of IDA. So in terms of explanation of a row, you will get 2 marks. In terms of impact on interest rate movements, 3 marks, right? So you see, this is the definition, row, right? And then you've got the interest rate impact. They talk about this as well, right? Normally. Yeah. And then for bishop thing, we get, when you estimate the PA, you're getting 1 marks. Other variables, 1 marks. That's a easy marks for anyone, right? Calculation of D1, D2 is 3 marks. Determination of ND1 is 2 marks, right? So value of option to expand decision is that much. Revised value of project and comments is 3 marks maximum. assumptions is 3 marks, so other factors is 3 marks. So very basically a lot of this could be scored very easily, very easily. Yeah, that's pretty much it. If you did not understand anything from here, do let me know. I'll definitely help you out. That's it for this particular video, and please do like, share and subscribe. Thank you very much. Take care. Bye bye.